welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
I'm Santosh Naik.
Well, Santo, another milestone Monday for the last street. 70,000 clocked in by the Sensex. And in fact, for the Nifty as well, I think we have a record closing high, 20,997, just a shade below that 21,000 mark. In fact, I was just looking at the screens. The Nifty Mid-Cap Index also hit a fresh high today. And so did the Nifty Bank Index, but it did come off a bit after hitting a fresh high of 47,588 or thereabouts. Experts are now counting down to 50,000 on the Nifty Bank. But of course, we'll have to see how that pans out. All the sectors managed to end the day in the green, barring the Pharma pack. Of course, we had Dr Reddy's and Cipla, both these counters playing spoil sport for the Nifty Pharma Index. In fact, even on the Nifty, Dr Reddy's lost somewhere around 5% or thereabouts, emerging as the top Nifty loser. We'll be talking about, what really triggered that fall in a bit. Aside of that, banking did well, as I was mentioning. Realty, FMCG did well. Among the Nifty gainers, you had the likes of UPL, who have that stock has clearly been underperforming for quite some time. But today it emerged as a top Nifty gainer. You had ONGC, Ultratech, Tata Motors, Bajaj Auto. These are some of the names that did well. On the flip side, Dr Reddy, Cipla, which I already mentioned, Axis Bank, BPCL lost somewhere around 2 to 3%, and M&M. So these were largely the losers on the Nifty. But lots of high flyers in the mid-cap end of the markets as well, Santo. Anything that's catching your fancy there?
Well, plenty. I think Bokart was in the limelight. Then you had Patel Engineering also. These two were big movers today, gaining more than about 10 to 12%. Clearly, the appetite for mid and small cap stocks remains pretty strong even at this point. There was some concerns just before the earnings season whether these companies will be able to deliver on earnings, but now that majority of the companies have delivered numbers that were at least in line with market expectation, if not beating it by a wide margin, I think the conviction in the mid and small cap stories has strengthened further. That is what you're seeing right now. All the macro indicators are positive. You have strong, very good GDP numbers, tax collection, rupee right now not a concern, not a cause for concern really. You have liquidity flows which are pretty strong. Both FIIs and domestics continue to pump in money. So it looks like every possible thing is going right for the market at this point, and which I think at some level is also a bit scary. Things seem to be looking too good at this point.
I was reading this article as well as listening to an interview by Hiren Ved. He says that by Christmas 2025, expect 1 lakh on the Sensex. Just last year, or in fact earlier this year, we were talking to analysts asking them how long, and they would just say 3 to 5 years. And now it's just like, in a matter of 2 years, you could be looking at Sensex at 1 lakh.
Well, I think these are, I would see some of these as warning signs, Nandita.
Well, we'll see whether that happens or not. But before that, let's take a look at some of the stocks that are on our radar this afternoon, starting with Dr Reddy's. 6% kind of a plunge coming in early, in the morning. But of course, it ended with losses of somewhere around 5% or thereabouts. Of course, it's the US FDA issues haunting these pharma giants once again. Just a few days ago, it was Cipla. The MP unit, Pithampur unit got a warning letter from US FDA, and this morning we had, Dr Reddy's on US FDA radar, 10 observations for its Bachupalli unit, which is the Telangana unit, and of course the observations are pretty serious in nature, observations relating to quality control, relating to contamination, microbial contamination, relating to procedural issues as well, even of the equipments they have used and stuff. And the fact that they have not been able to explain, all those discrepancies which were there. So these are some of the red flags that have been raised by US FDA on Dr Reddy's. And Antique, as a broking house, has come out with a sell rating on the stock, target price much lower at 4,766. It believes that some observations are really severe in nature and could attract a warning letter. Now, if a warning letter comes, then that means if there is no remedy or remedial measures, then there are chances of an import alert. Once that happens, of course, you won't be getting approvals for drugs. So that comes as a big setback for pharma giants. So that's one monitorable. And aside of that, if you look at this particular unit, it forms somewhere around 30% of its US revenues. So that's a significant part of revenues, and if there is a warning letter, that will be digested pretty badly by the street. Same goes for Cipla. the unit, the Pithampur unit that has got a warning letter. Now investors are concerned because Goa unit is already under US FDA radar as well, right? So they are scared that if there is a import alert for the MP unit, that will also be coming as a big setback for Cipla. So a lot of these blue chip pharma companies on US FDA radar, and that comes as a big sentiment dampener, given the fact that earnings were pretty good for some of these companies. And for Dr. Reddy's in particular, earnings are pretty good. But now, with these US FDA issues, looks like analysts are asking investors to focus on India-focused pharma giants now. So we'll have to see how these regulatory issues really pan out for some of these pharma majors to really decide whether one should look at these companies or not.
Absolutely, Nandita. That comes as a big setback for Dr. Reddy's. In the case of Cipla, also, if you notice, there was a big sell-off. The stock dropped sharply, but since then has managed to claw back some of the losses. So I think today what we are seeing in the case of Dr. Reddy too could be this knee-jerk reaction. The stock may recoup some of the losses, but what probably is likely to play out, like we have seen in the case, if we are just going by how some of the other stocks have reacted when there have been US FDA warnings, is that the stock may recoup some of the losses, but again to post some big gains, that probably takes time till investors regain confidence. In the case of Dr. Reddy, we had seen a very sharp re-rating, mainly because of the Revlimid sales. But since then, again, the stock has been struggling around the 6,000 odd level.
In the last 1 month, Santo, if you look at the charts for Dr. Reddy's and Cipla, both of them haven't really participated in a big way.
Yes,
and that too at a time when we've been hitting fresh highs, right? So
exactly.
A lot of
so
catch up to do.
Again, the second point that you mentioned, Nandita, that clearly at this point in time, the sentiment, what also most analysts are saying is that you're better off focusing on stocks that have largely trying to make the best out of the India play, and you have quite a few names out there as well. So things were beginning to get better for companies which were seen as the US marketplace. Some of the rival generic companies have been under pressure, because of which pricing has slightly improved. But as these US FDA warnings go to show, clearly most of the gains that were made because of easing competition, those are slowly getting negated.
Right.
Well, the stock on my watch list today is HPCL. Came under profit. It came under wave of profit booking today, down by close to about 4%. The stock has been doing fairly well, but the chatter in the market right now is that the longer term story, at least if not the longer term, at least the medium term story still looks intact. Till some time back, the bigger worry was that clearly this is an election year. Should crude prices continue to go up, oil marketing companies will not really have the flexibility to raise prices, because of which their margins could be under pressure. But the good part has been that actually crude prices have been quite steady. In fact, they have been coming off as well. And among the brokerages which are bullish on HPCL, we have ICICI Securities, which has a buy rating and a target price of 365 rupees. Now, according to HPCL, according to ICICI Securities, HPCL is likely to be a steep growth in refinery throughput. There's a 15 million ton expansion by the end of FY25. Also, ISEC sees the marketing margins for HPCL improve, and it's also taken heart from the fact that the company is managing to reduce its debt burden. The gross debt was down from about 71,000 crore at the end of the March quarter to about 58,000 crore right now. And also, according to ISEC, the valuations right now seem to be fairly reasonable. The stock is quoting at roughly about 2.5 times its earnings for FY25. Also, an EV to EBITDA value of about 4.2%. And lastly, the price to book at 0.8 times FY25 is also fairly reasonable, according to ICICI Securities.
Right, I think OMCs have been doing pretty well, and given the fact that BPCL etc. have been hitting fresh 52-week highs, there were concerns whether valuations getting stretched or not. But couple of global brokerages believe that the best is yet to come, and next year, once the elections are out of the way, we could see better days ahead for some of these OMCs if they get pricing freedom back after the general election. So we'll of course be watching out for this pack. But let's talk about IREDA. the recent listing rather, government owned enterprise. It's the first PSU listing after LIC. Issue price or IPO price was 32 and it listed with a handsome gain, and now it's quoting at 165% above its IPO price of 32 rupees a piece. So that's phenomenal, and it has been riding on the positive sentiment around these power firms, PSU rally as well, and analysts believe that it's a long-term play and it could rally further. It is of course into green financing, and that is the next big theme, right? So in fact today it floated a retail division for providing loans under this whole theme of green projects, right? So that has boded well. Today itself it was up 17% and thereabouts. If you look at the asset book, I want to just take you guys through the breakup. 30% of the asset book is dominated by solar energy, 20% comprises wind power, 19.2 or 20% around for state utilities, and 11.5% asset book comprises hydropower. So it's a pure play green financing company. We don't have a lot of these companies right now. PFC, REC, they are also trying to make inroads into the green financing segment, but they are still at very nascent stage. But this particular company, it is it already has established itself, and analysts believe that going forward this is the big theme, right? Renewable energy, and it provides financing for that. But there is a section of the market that believes that after the kind of run up it has seen, it has become fairly expensive compared to PFC, REC. But the loan growth or loan book prospects look pretty solid according to analysts. So looks like this has more legs to it.
Well, clearly at this point power is the clear favorite of the market by a mile. Anything to do with power seems to be an instant hit. Well, again, when there is too much enthusiasm about one particular sector, probably Nandita, I would say that experience teaches me to a little cautious, because the market seems to be extrapolating future earnings for the next 2 or 3 years right away, and that really calls for some caution. The last stock on my watch list today is Kansai Nerolac. Now, between May and November, the stock had seen a swift run up, rallied by close to about 40%. Overall, paint stocks did have a fairly good run. Now, the company has also recently held an analyst meet. Now, analysts have come back from the meeting with a mixed set of views there. Still, and most analysts don't seem to be pretty excited about the stock right now. Morgan Stanley has an underweight rating on the stock with a price target of about 250 rupees, whereas Macquarie has a neutral rating on the stock with a price of 345 rupees. Now, the big one of the negatives for Kansai Nerolac has been that it's been losing share in the decorative paint segment, and it's now trying to recoup market share there, and how effectively it's able to do that, that will really decide whether the stock will be re-rated or not. Kansai Nerolac's main strength is the industrial paints division, and now because there is a lot of infra spending happening, Morgan Stanley is of the view that this actually bodes well, though at this point in time the demand trends are fairly mixed. And Macquarie has said that the company is trying to premiumize its industrial paints offerings, and that could be one of the key triggers. Now, the company is aiming for a EBITDA margin, gross EBITDA margin of close to about 14.8% by the end of FY25. Now, company's margins have been under pressure for some time. In fact, it has seen gross margins of even 17 and 18% till a couple of years back, but since then it's been coming off. It's fallen as low as 11 to 13%. It's slowly, there's some bit of uptick. So close to 15% is what the company is targeting. The growth in top line has been decent over the last few quarters. Now, if it manages to get its margins as well correct, then probably you could see some bit of action in the stock.
But any impact of higher competition going forward, because we know that Birla Opus will be launching sometime in January. Berger Paints, that's I think the second number 2 paint player, so that will face stiff competition. But any risks to a stock like a company like Kansai Nerolac?
No, Kansai's main strength is the industrial paint segment, whereas much of the action that we are seeing, more competition is likely to come in the decorative paint segment. That's where the Berger and Asian Paints are slugging it out. Grasim is will be stepping up its game there shortly. JSW Cement already has a presence. That company too is in the process of expanding its capacity. So all in all, you'll see a fair bit of action there. But as long as the market grows, then probably the pinch might not be so much, but if the market is not growing, then that is where there could be a problem.
All right, that was about the paint segment. But with that, we have come to the end of this edition of Closing Bell. Those were all the stocks that were on our radar this afternoon. We'll be back with the markets at 8:30 a.m. But if you have any comments, leave them in the comment section below. And of course, come back and join us tomorrow morning at 8:30 a.m. when we come back with the markets, lots of stocks to watch out for, and of course, your stock-related queries with our technical expert on the show. So it's a goodbye from me and Santo. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.
Have a nice evening ahead.